Right, so this question here, question 3A, was asking you one reason why the RBA lowered the cash rate in 2015. So most people were able to choose good things in this exam. You could talk about the slower growth overseas, rising unemployment levels, you could talk about weaker commodity prices and so on and so forth. But what you really need to be able to do more succinctly is basically explain what the RBA's charter is. A lot of these questions, and this goes for any question that asks you the implications for monetary policy settings, people are ignoring the fact that the RBA's main goal is the pursuit of low inflation. So every time you get a question about the RBA's stance or why they've done something, you have to start your answer by saying that this thing, whatever you're talking about, whether it's lower commodity prices, whether it's increased underemployment, whatever it is, you need to specifically state that that is helping to lower the rate of inflation. So, for example, if you choose weak wage growth, you have to say that that's leading to less inflation, and therefore the RBA can therefore focus on being more expansionary and focusing on growth and employment. Every single time you get a question about the implications for monetary policy from now on in, you have to say that it's going to lead to less inflation first, then talk about the other goals. If you ignore the low inflation part, you are not focusing on what the RBA is trying to achieve. So if you go with weak wage growth as your choice for this year, you would say that weak wage growth is leading to less consumption, it's leading to lower wage pressures. This is controlling inflation, keeping it below 2 to 3%. So the RBA is able to be more expansionary and focus on growth and employment because inflation is below the 2 to 3% target range. Don't ignore inflation or you will struggle to get full marks. Question 3B was pretty good, talking about the two transmission mechanisms. You can have a look through this yourself. With the cash flow mechanism, make sure you're talking about discretionary incomes for consumers and how for that boosts discretionary income, and therefore the costs of servicing existing debt is less, and therefore firms also have lower borrowing costs. This is the bit that people are losing marks from. Some people aren't linking it back to unemployment. So you've got to say that the increased aggregate demand is leading to increased production and therefore increased derived demand for labour. Because there's more demand, we're producing more to meet that demand, it's increasing the demand for labour. This should result in less cyclical unemployment because there's more demand for labour. With the exchange rate channel, lower domestic interest rates depreciate the value of the dollar. Try and start using the terminology, this bit here, with declining interest rates in Australia, overseas investors are less likely to invest, and use the term interest-bearing deposits instead of just investing in saving accounts. Interest-bearing deposits is basically a fancy way of saying that they're less likely to save in Australia, but it just makes you sound more sophisticated. So there's overseas investors are less likely to invest in interest-bearing deposits, therefore that leads to less demand for the Australian dollar, and will also lead to more supply of the Australian dollar because more Australians are likely to invest in these same deposits overseas because they'll get a better return. Second part of the answer people are pretty confident with, that depreciation is boosting demand for exports. That's leading to increased production and therefore creating more jobs in the economy. So that's pretty cool. That's the first bit. Question 3C, a negative impact on the economy of low cash rates. Look, I prefer you to link this to either housing prices or people with savings, particularly self-funded retirees. I wouldn't go with the increase in debt angle, although I have seen some pretty good answers in relation to that. So the main reason that low interest rates are negative is that it's leading to increased house prices. That's leading to making it less affordable for people to buy housing, pricing them out of the market. It's leading to them having to go into more debt. It's leading to others having to buy houses well away from the city because they can't afford them. They're the kind of things you need to be able to talk about for that question. 4A, the question was about the budget stance. They got given the figures. As I keep saying to you, if you get given figures, you have to use them. There's no choice. Use them as many of them as possible. Generally start with the start and end point, but in this question here, they were actually asking you for 2 specific years. So you would say that the fall in the budget deficit from 41.1 billion to 35.1 billion in the underlying cash balance. They give you other figures, make sure you can use them as well. So the smaller percentage of GDP. This is generally seen as contractionary. Some people are saying because leakages outweigh injections. That's not true. Leakages are still less than injections. It's contractionary because the relative level of leakage is increasing relative to injections. Try and mention that this is also likely to decrease aggregate demand because it's a sign that the government would probably have to raise taxes or reduce welfare. But make sure you really link it back to aggregate demand. It's contractionary because there's more leakages relative to injections compared to last year. This is likely to reduce aggregate demand in the economy. This question here was about what the impact on the budget will be if we have more unemployment. Really key thing with this question is that you do both the automatic and discretionary stabilisers, and you don't get in the habit of listing. Explain yourself fully. So budgetary outlays would tend to rise because there's more unemployment. The government's going to be spending more on welfare. The government's also going to be collecting less tax because more people are unemployed. The government's also going to be collecting less GST because less people are spending because we've got less money. You could also say that companies are going to get less company tax because they're making less profits because people don't have money to demand their goods and services. And then you've got your first 2 marks for nailing the automatic stabilisers component. Less income tax, less company tax, less GST, more welfare. With the discretionary policies, again, you can't ignore these. The government is also likely to employ discretionary measures if unemployment increases too much. These discretionary measures may be increased education and training, because if we've got a lot of unemployment, there might be something the government has to do to try and get people a better level of education. They could also implement lower tax. They could implement tax cuts. They could implement cash handouts, more infrastructure spending. Any discretionary measures that are trying to boost growth and boost us out of this period of high unemployment. You could also talk about how they may need to spend more for social disharmony, because unemployment can result in mental health issues and things like that as well, and that can increase government expenditure as well. But don't ignore the discretionary element to that question. 4CI, asking you how the budget is financed, basically asking you the relationship between budget deficits and national debt. Really important question. As you can see, not answered well again, probably going to come up this year. In order to answer this question and get 2 marks, you first need to define what a budget deficit is. So a budget deficit represents a situation where budgetary outlays for the next 12 months exceed budget receipts. This means that the government has to borrow. The government can either borrow from the private sector or the foreign sector. It doesn't matter. Both of them are going to lead to increased public sector debt. So to get the full marks, define what the budget deficit was. That it means that expenditure exceeds revenue for the next 12 months. This means that the government has to borrow. They borrow from issuing bonds to the private or public sector, sorry, private or foreign sector, and that leads to increased national debt. 4C number 2, this question here is talking about a legacy of debt. So a legacy of debt, what that basically means is that future taxpayers are going to have to pay for what the increased spending of the current taxpayers for the future. And the problems with that is that if they're going to have any public sector debt passed on to future generations, it may have to be paid back by using taxes. So it might need to increase the level of taxes in the economy. It may need to reduce welfare spending, reduce the level of spending on education, on health, and all of this is going to put an extra restraint on the future taxpayers. So the key to this question was being able to identify what a legacy of debt means, then linking that back to how the government is going to have to pay for that through reduced spending and increased taxes, and how that can hurt future generations. And you can talk about the opportunity cost associated with paying so much interest on our debt as well, and therefore they don't have that money to spend on goods and services. And finally, the equity answer. Again, this question will be very different this year. Last year they were talking about, the main one was the changes in childcare. Obviously it's 2016 now. This question here, I think I've said it 20 times, but you need to define the goal of equity first. Okay, you will get a mark for that. Do it first, then link the rest of your answer back to the goal. That just goes for any single goal you're doing. Just define it at the start. Then what I would do with this year's budget, I talk about the changes in superannuation tax because there's the most to it. Be really clear with your language though. The change in the superannuation tax means that you have to start paying 30% tax on all super contributions over $250,000 instead of $300,000. This is going to hurt all income earners above $250,000. If you just say it's hurting those between $250,000 and $300,000, the examiner will look unfavourably on that. It's going to hurt all of them because they're all going to be paying more tax between $250,000 and $300,000. This has been complemented by the low income tax offset, which means that low income earners will get $500 back if they earn on their super contributions, or tax on their super contributions, if they earn less than $37,000. And they're also capping the amount to $25,000 that high income earners can pay on that. Sorry, they're capping the amount to $25,000 that high income earners can contribute to their super before tax, and that's going to mean that they can't take advantage of the tax concessions and hurts them as well. Then link that back to low income earners having a more dignified standard of living, the smaller gap between high and low income earners. Really important with these policies that you actually explain them in detail, you don't gloss over them. That goes for the youth employment package, the superannuation and so on and so forth. As I said, I've given you plenty of sheets that go through them in detail, particularly that table at the start of this year. Make sure you know the key steps from each of them. Particularly the changes in the tax bracket from 80 to 87,000. You need to be able to explain that succinctly, because it means that anyone earning between 80 and 87,000 in that tax bracket, and that includes anyone earning over 80,000, because they will all pay some income tax in that tax bracket, will now be paying 4.5 cents tax less per dollar, and that will lead to less increased disposable income and reduce the gap between high and low income earners. That's last year's budget. No, it's last year's exam.